everybody, this is Eric with Momentum Options. So today we are just going to be talking about patterns and trends in the market to help you identify profitable trades. So what do we mean by patterns? And there are many different types that traders use to identify setups. Two of the most powerful that we use frequently here at Momentum Options are the bull and bear flags. And basically what that is you can see that we have a bullish flag is a increase in price, an area of consolidation, and then what we expect is that once that top resistance, and we talked about support and resistance in one of my previous videos, once this top resistance is broken, that price will continue higher. And using that flagpole, we can kind of figure out where it's going. So there are many different types of patterns. They're not just bull flags and bear flags. We have head and shoulders, which is basically 3 moves up. You have a left shoulder, the first part of the move, then price falls, and then it goes higher, and then it falls, and then it only goes as high as that first move. It makes a head and shoulder pattern. If that happens, then we think it indicates a strong move down, and you can enter a position based on that. We also have a cup and handle pattern, and it looks just like it sounds. It's where price has fallen, made a bottom, come back up, fallen not as much, and made a handle and come back up to that same peak. And now once we break that peak, we think price will go higher, and using the cup and handle pattern, we can kind of figure out where it's going. So there are also inverse patterns to look out for, like the inverse cup and handle. So that's when price rises and it makes a base for a top. So it makes a top, then it falls, and then it goes higher again, but not quite as much, and makes another round top, comes back down, and once it reaches the bottom here again, we say price is going to fall, and we can measure by how much. Same thing for inverse head and shoulders, and we'll try to look at some examples of what that looks like here in a few minutes. As I mentioned before, there's a bull flag and bear flag. It's sharp movement in price followed by a period of consolidation. We have pennants, and that's when 2 trend lines that are moving opposite directions converge, and we say a break of either side of that trend line, and we have direction. We have triangles, and these are similar to pennants, or sorry, skip one, wedges. We have wedges, and wedges are when 2 trend lines converge in the same direction. So if price is moving up and there's a trend line on the bottom and a trend line on top, but they're getting closer together and making price trade in a tighter range, we say when that wedge breaks, you have a serious move in direction. Now triangles are a little bit similar to pennants, but all of these basically have the same rules. When you have a break of the trend line, then you have your direction, you have your buy or your sell. But if you're trading options, it's buy, because you can buy the calls or you can buy the puts. We also have things like double tops and bottoms. Sounds just like it is. You have an area where price is rejected twice, whether it's a high or a low, but it indicates a buy for puts or calls, depending. We also have triple tops and bottoms. This is exactly like it sounds also. It's where price is rejected 3 times. And we have gaps. So gaps are areas on a chart where price was skipped over. And all prices on a chart essentially need to be traded. Market makers just like to be able to make money everywhere, so they ensure that they do. So what does this all look like? Now let's try to identify a few patterns. We're just going to look at some charts. I'll be looking at the S&P, So looking at the S&P, just a quick look. We have a pattern like that. Now, when it broke to the downside, you could have bought puts. I mean, you had one day to make profit. And now, let me adjust this one because I would say resistance had been here. And now we're breaking to the upside, and I would say you should buy calls. Let's look for another pattern. So it looks to me like right here we have a shoulder inverse, a head, and it's not very pretty, I'll give you guys that, but we didn't go lower, and it's holding about that same area. So I would say that that would have been a nice inverse head and shoulder pattern. And if we say that I think we should say that this is our top. That's what it looks right to me. But some of this is subjective, guys. If you have another way of looking at it, maybe you're right. Trade your plan. If you have a set of rules and a set of guidelines that you've entered that trade for, follow your plan. That's how you make money. So if we measure this distance from the top to the bottom of the head, and we put that on our breakout level here, halfway up is price target 1, all the way up, price target 2. Very simple. Now, as I mentioned, bull flags and bear flags are the most, it's the ones that we trade off of the most at momentum options. So let's find a bull flag. Since the market is getting quite exciting right here, let's use this one. So what has happened? Price made a low, started an uptrend, and stopped here, right? You guys all see that? So if we measure the length of this flag, that's our flagpole here, and we can say that price consolidated, making our flag. You don't see that? The top of the flagpole is our breakout, and if we duplicate this and extend it to the breakout side, about halfway up is price target 1, and all the way up is price target 2. So if you had entered this trend and your trade premise is basically this: once this price was broken, you would want to buy because you would think it's going here. Now, you know, went halfway and you could have locked in some profit on this day and decided this day at least, let me, take my money. And then we broke this level. Maybe you thought we were even going down. You could have gotten puts here, and chances are it wasn't enough money for you to profit before it reversed. But then once we got back above, you say, look, okay, we're going up. I'm going to buy. And you rode this move all the way up to your first price target, and bam, great profit, $9 move. So this is just one of the ways, one of the things we look for at momentum options. We look for these breakouts, and we use our tools to make this a little more scientific, more mathematical. If we just measure using our eyes here, I mean, it's not terrible. You guys can see how this plays out pretty well. But there are ways using some of the tools in Thinkorswim and the other platforms that will definitely give you an edge. In our chat, we actually, I don't believe we had SPY this week. Maybe I'm wrong, but we definitely had QQQ on the breakout, and one of our first price targets was right in this range. So I think we actually did last week too, or I'm sorry, excuse me guys, this is 5, 10, a month ago. But we've been in and out of this move a good amount of times and have profited a good amount of times. So I hope this helps. I hope you guys kind of have an idea of what to look for, and if you guys need any help, I hope you will follow our page and join our group. And if you guys want to have analysis and have me help you look at this during any regular trading hours, check out our website and join our chat room. And if you guys really want to get the more mathematical, in-depth approach of how to do this and be highly accurate, take our classes. We can definitely teach you how to make money. All right, guys. Well, have a great day. Hope this helped. See you guys later.